Amit Bhai and Narendra Bhai are in partnership sharing profits and losses equally. From the following trial balance and adjustments given below, you are required to prepare trading and profit and loss account for the year ended 31st March 2019 and balance sheet as on that date. We have been given the trial balance for 2019. As you can see, I've already made the format. And we have a few hidden adjustments in this question. So first of all, as far as the government bond is concerned. Alright, so let's see. We'll have some space here where we'll get into the different hidden adjustments. So as far as the government bond is concerned, it's an asset. That means we as a partnership have invested in the bond for 40,000 rupees at a 10% rate of interest. And this investment happened on the 1st of October 2018. The year is ending on 31st March 2019. So if you count the number of months, October, November, December, January, February, and March, we are talking about 6 months. So as far as our accrued interest is concerned, accrued interest on government bonds, we are talking about 40,000 into 10% into 6 by 12, which will give us 2,000. This will go in two places. The first place is the P&L account credit side. The second place is the asset side. The next adjustment we have is for advertisement. They have told us that it is with effect from 1st of January 2019. 3 months later, the year ends. You have paid for 2 years 10,000 and we have only used 3 months out of those 2 years. So the P&L account item for advertisement expense. Alright, so let's see. Advertisement amount to go to the P&L account, P&L debit side, is going to be 10,000. We have 10,000 into dash upon 24. Now see the number of months that we've used it. Jan, Feb, March. So into 3 by 24. What about the remaining amount? That will go to the balance sheet as prepaid advertisements. Okay, so prepaid advertisement to go on the balance sheet asset side, and our calculation is going to be 10,000 into 21 by 24, and we have 3 by 24, which gets reduced to 1 by 8. So 10,000 into 1 by 8 should give you around 1,250. Similarly, this should give us 8,750. Now, let's see, do we have any more hidden adjustments? Right, that should be it. Looking at the other items, plant and machinery is an asset, factory building is an asset, debtors is an asset, purchases goes in the trading account debit side, bad debts we have a format on its own and it goes in the P&L debit side, sales return trading account credit side, government bonds we already discussed, there's an adjustment for the accrued interest, but the government bond itself is an asset. Import duty is something that we incur when we buy goods. So that too will come in the trading account debit side. Legal charges, P&L debit. Motive power, again back to trading debit. Warehouse rent is a P&L account item, P&L debit. Cash in hand, cash at bank, both of these are assets. Advertisement, we already discussed those places. Salary is an office expense. Rent is an office expense. Drawings of both the partners will be mentioned in the liability side as a subtraction from their capitals. Furniture account, again asset. Bills receivable asset. Freehold property asset. Capital accounts, both of them will go to the liability side. Sales, trading account credit. Bills payable is a liability. Discount is on the credit side. Credit all incomes and gains. So this is P&L credit. Creditors is a liability. Old RDD will go on the P&L debit side as a subtraction from bad debts. Bank loan is a liability. Purchase return will go on the trading account debit side as a subtraction. Similarly, when you look at sales return, it's on the trading account credit side also again as a subtraction. Looking at our adjustments, we have a stock on hand on 31st March 2019. This is what we call closing stock. Now, it goes in two places: trading account credit side, balance sheet asset side. Uninsured goods worth 8,000 were stolen. Since they were uninsured, we get no insurance claim. The whole thing will go on the P&L account debit side as well as the trading account credit side. P&L debit all expenses and losses, but the goods itself are being stolen or taken out of the business, so we credit what goes out. We've been asked to create RDD at 2% on debtors. That's part of our format. So keep in mind, RDD goes in two places: P&L debit as well as asset, where we subtract it from debtors. Mr. Patil, our customer, became insolvent and could not pay his debts of 500. This is what we call further bad debt, which will also go into the P&L debit and on the asset side as a subtraction from debtors. Outstanding expenses, we have rent and salaries. Both of these you will find on the P&L account debit side, and since they're outstanding, they will also come as a liability. So the fact that it's outstanding means you're going to have to add it to the P&L debit. Second place it goes is a liability. We've been asked to depreciate factory building by 2,500 and furniture by 1,800. We have our amounts. It goes to the asset side as a subtraction, P&L debit side. Debit all expenses and losses, and since the assets are reducing in value, we subtract it from the assets. Now, it's important for us to mark whichever accounts are affected in the adjustments so that we remember to leave a line. So as far as debtors is concerned, anyway, we have a full-fledged format. We're not going to get into putting dots, but let's see. As far as outstanding expenses for rent and salaries are concerned, let's see. Where can we find rent? Salaries is here. So next to salaries, I'm putting a dot. Means I write the number in the inner column and leave a line. Similarly, rent is right below it. I'm putting a dot. Factory building and furniture. Factory building is here. And do we have furniture? Right here. Now that we are done going through the adjustments, we are done our marking, we are ready to solve the sum. And I would suggest we go line by line. It becomes much more efficient in that way. The first item I see here is plant and machinery, and that goes in the balance sheet asset side. So plant and machinery, we don't seem to have any depreciation. We can put it in the outer column. Plant and machinery, 2,80,000. Next, we have factory building, which we can put right below. Factory building. And we have an adjustment which we will complete as and when we reach there. For now, I just put this in the inner column and leave a line. Next, I have sundry debtors. So after leaving enough of space for the adjustment, sundry debtors. And remember, from sundry debtors, we subtract further bad debts. And we also subtract the new RDD. So less new RDD. Now, sundry debtors given to us in the question is 28,700. Next, we have purchases, trading account debit side. So I'm going to the trading account, and let's see, maybe we have opening stock, who knows. I'm leaving one line just in case, and I'm writing 2 purchases. And we came across returns. So remember, always if you come across returns wherever your purchases, remember to put a dot so you don't end up making a mistake by putting it in the outer column. So purchases, we have 85,500. I'm putting it in the inner column, and I will remember to leave a line. Next, we have bad debts, which goes in the P&L account. So we'll have to have that division between the trading and P&L, and I think this is enough of space. If we are starting the trading here, I think this should do. Let's see, should give us enough of space. Let's see how it goes. We have 2 bad debts, to which we add further bad debts, to which we add new RDD and subtract old RDD. Now, how much is the bad debts given to us? 500. So I'm just going to put 500 on the trading account debit, on the P&L account debit side. Next, we have sales return, and we haven't even got to sales, but obviously there has to be sales in the question. So I'm going to make the entry for by sales, but I'm not going to bother filling it in now because I've not reached it yet. Less sales return. And sales return is 2,200. Next, we have 10% government bond. That is in the balance sheet. So I'm going here, 10% government let's do that again. Government bond, and the 10% government bond is worth 40,000. The accrued interest on that same bond, accrued interest, is going to end up being 2,000. Now, going back up to the P&L credit side, we leave the first line for what should hopefully be a net profit, and below that we're going to have by accrued interest, outer column 2,000. Now, next we have import duty, which is a trading account item. So we are going to scroll back up to the trading account, and we can have a little bit space for the return to import duty. And the import duty is 1,800. Next, we have legal charges. It's an office expense. Back to the P&L debit side, to legal charges. Legal charges amounting to 2,000, no adjustments, directly in the outer column. Next, we have motive power back here, to motive power 12,000. Next we have warehouse rent. To warehouse rent, and warehouse rent amounts to 1,800. And if you notice, we're actually running out of space on the P&L account, so we're going to end up borrowing space from the trading account. Let's see, we have finished warehouse rent 1,800. Yes, now we go back to the balance sheet because we need to place cash in hand, cash at bank, 20,000, 70,000. So cash in hand, cash at bank, 20,000 and 70,000. Next we have got advertisement. So looks like this is the last adjustment. Frankly, we don't need an adjustment, we have our numbers. So advertisement in the P&L debit side is 1250 to advertisement (1250), and balance sheet asset side we can have prepaid advertisement, and was it 87, let's see, yeah, 8750. Now that we are done with advertisement, we have salaries and we have an adjustment. And if we put that at the bottom, that's probably the last adjustment and entry we can make. Given the amount of items that have actually turned up on the debit side of the trading account, we can use more space here. Right, but for now, let's see. Yeah, I think we may as well. Maybe from here. So we have 2 salaries, and in the inner column 3,800. Leaving space, and mindfully leaving space, we have 2 rent 1,500, and now the next thing we have is drawings. Drawings comes as an entry on the liability side under the capital account. So we have capital, under which we have the first partner, Amit Bhai, from whom we will subtract drawings and add or subtract net profit or loss, which we don't know yet. So leaving a little bit of space, we will mention his partner, Narendra Bhai, and again from him we end up subtracting drawings. Now drawings is what we have come across in both of them in the trial balance. 2,400 for Amit Bhai, so 2,400, and as far as Narendra Bhai is concerned, it is 3,200. Now, next is furniture. Furniture we can place here, and in the inner column, because we have depreciation coming up later, 1,95,800, and so leaving space for that entry, we have bills receivable amounting to 20,700, and freehold property amounting to 41,000. Now, on the liability side, we have the capital accounts of both partners, Farmith Bhai and Narendra Bhai, 3,50,000 and 3 lakhs respectively. So I'm placing the numbers 3,50,000 and 3 lakhs. Next, we have sales going all the way back on top, and we already made space for sales, 1,80,000. So 1,80,000. Who's next? Bills payable, liability side, leaving a little space for the profit or loss. So bills payable. Bills payable, we have no adjustments, so directly in the outer column, 8,500. Next, we have discount, P&L credit side. So by discount, and since on the credit side and it's an income, we know very well that this is discount received, so may as well write it, discount received. Okay, and our amount is 1,200. Next, creditors, liability side, 38,500. We have RDD, and remember, this is old RDD. Old RDD comes only in one spot because it's a trial balance item, and that is here, corresponding to 2,700. Which makes me wonder whether this whole thing is actually going to fit on the debit side. We only have 500 as a debit for bad debts, credit 2,700. Let's see, maybe for the bad debts in new RDD will save the day. Going forward, we have bank loan of 15,000. Bank loan 15,000, no adjustments. And the last one, purchase return, and we'll have less purchase return amounting to 2,000. Oddly, we don't seem to have opening stock in this question. Not a problem. Now, we are done with all our entries. It's time to begin looking at the adjustments. First adjustment, we have stock in hand on the 31st of March 2019, 43,000. That is what we call closing stock. So closing stock, and remember to write buy. Right, so to and buy is very important in the trading and P&L account. Balance sheet is a statement, so we can directly write the items. Buy closing stock, and the amount is 43,000 outside. Immediately go to the next place, which is balance sheet asset side. Again, closing stock, 43,000. Next adjustment, we have uninsured goods stolen, and that is going to be another entry on the trading account credit side by loss by theft. And the amount is 8,000. Credit what goes out, and now we debit all expenses and losses. So 2 loss by theft, and the same amount, which is 8,000. Next, We have RDD 2% on Sundry Debtors, but always remember it's good to finish further bad debts first. So we have further bad debts corresponding to 500. So further bad debts over here 500, and go down to the balance sheet, and we have an entry for further bad debts here as well. So again 500. Now the next step will be to calculate your reserve for doubtful debts, and it's at this point of time you need to find out the value of your debtors after subtracting further bad debts. So that will be 28,200. I'm going to do the math over here. We are going to end up with 28,200 into 2%. Okay, so the zeros go and we have 564. So 564 is our new RDD here, as well as here. And I think looking at this, we have come to realize it's of no use putting old RDD on the debit side, because it's much more heavier than your new RDD, bad debts and further bad debts combined. It would now make more sense. It would now make much more sense to put it on the credit side. So I'm just going to cancel these people and instead leave a line for the profit. Okay, we're going to have buy old RTD 2,700 less new RDD 564 and leave it at that. Now, Mr. Patil, our customer, became insolvent. We have already dealt with the further bad debts. Outstanding expenses: rent 800, salaries 300. Rent 800, salaries 300. Immediately on the liability side, we'll write outstanding expenses as a heading, under which we have rent and salaries. Rent corresponding to 800, salaries corresponding to 300, and therefore if you want a total on the outer column, 1,100. We've been asked to depreciate factory building by 2,500. So factory building is here, and we will say less depreciation. So depreciation for factory building is 2,500, and depreciation for furniture is 1,800. And now we need to put it on the trading account debit side as well. Question is, do we have space? And looks like we have shorter space, so let's just make an adjustment. Now we have depreciation, two items. We can list them one after the other. So we have building for 2,500 and furniture for 1,800. Okay, and yes, it's factory building, so let's squeeze that in, factory building. With that, we are done with all our adjustments. Now we can start finding outer column totals. So 85,500 minus 2,000 should give me 83,500. Similarly, 1,80,000 minus 2,200 should give me 1,77,800. 3,800, and remember this is outstanding, so I should have actually done add outstanding, add outstanding. So we end up with 4,100, 2,300, only these two, so 1,000 and 4,300. Similarly, we may subtract. We should end up with 2,136. Yeah, that should do. 2,136. Now, we can go ahead and calculate the gross profit. The total of the heavier side. The total of the heavier side needs to be written on both the sides. And y'all are not allowed a calculator, but I'm going to take that liberty. We have 1,77,800 plus 43,000 plus 8,000, 2,28,800, which we can write on both the sides. Looking at the numbers you have here, 1,77,800, 43,000, compared to the numbers you have here, it's very clear that the credit side is heavier. Now, after having done that, I'm going to add up the numbers on the debit side and then subtract. We have 83,500, 1,800, and 12,000. Now, subtract. And we end up with 1,31,500. This will be 2 gross profit carried down, transferred to P&L account. 1,31,500. And immediately down here, by gross profit brought down, 1,31,500. And again, I have a set of numbers to total. So let's see, we have on the debit side something as big as 1,31,500 followed by smaller numbers to add. I don't think we have anything on the debit side to match it, so we should end up making a net profit. Okay, and there is a shortage of space. I'm going to do it right at the bottom. Whichever side is heavier, we write the number on both the sides. I think it is going to be the credit side. So we start with 1,31,500 plus 2,136 plus 2,000 plus 1,200, and we have 136,836. Which I am writing on both the sides. Now let's add everybody on the debit side. We have 4,100 plus 2,300 plus 1,000 plus 2,000 plus 800 plus 1250 plus 8000 plus 4300. Okay, so 24,750, and from that we subtract it from 136,836, so 112086. And remember, this profit is the net profit, but it gets transferred to the partners equally. So it will be 2 net profit. We know that that number is 1,12,086, but it will go to 2 people. And I'm squeezing this in. We have Narendra Bhai and no, Narendra Bhai is the second partner. The first guy is Amit Bhai and Narendra Bhai. Both of them 50-50, so you can divide it by 2. 56,043, 56,043, 56,043. Having done that, we are here. We can add the net profit 56,043 add net profit 56,043. $350,000 minus 2,400 plus 56,043 gives us 403,643. Similarly, we have 3 lakhs minus 3,200 plus 56,043, which gives us 3,52,843. Now, we have some outer column calculation still pending. Okay, and since I have the calculator, I'm going to use it. 75,000 minus 2,500, 72,500. Similarly, we have 28,700 minus 500 minus 564, which gives us 27,636. And one last calculation. I think it's fairly easy looking at it, we can do. And we'll end up with 1,94,000 in the outer column. Now that we are done with all inner column, outer column calculations, we are in a position to find the balancing figure. So 2,80,000 plus 72,500 plus 27,636 plus 40,000 plus 2,000 plus 20,000 plus 70,000 plus 8,750 plus 1,94,000 plus 20,700 plus 41,000 plus 43,000. 8,19,586. $19,586. Now let's check this side. We have 4,03,643 plus 352,843 plus 8,500 plus 38,500 plus 15,000 plus 1,100, which gives us a matching answer of 8,19,586. With that, we are done with the sum. This is the first very long sum done on this channel. Please feel free to leave your feedback. Thank you.